Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correa. We're going to be talking about debt. We're going to be talking about how to protect yourself against debt. We're going to be talking about stagflation. We're going to be talking about the silver squeeze for peace. But first and foremost, Jerry, there's a couple things that you've completely nailed over the last couple of years, and one of them is a downgrade to U.S. debt. You called it. You said they would probably get downgraded again. It's happened. Can you tell us a little bit about it?
Thanks for pointing that out, Jeremy. I appreciate that. So on our recording last week, we recorded on the Friday as we normally do, and I mentioned about just the looming the Moody, the rating agencies that are just standing by. They're watching the U.S., the spending that they're doing, how unsustainable everything is. The interest payments have breached $1 trillion. This is totally, they're out to water. They're on the waters. This is uncharted territory. And it was just a matter of time that one of the rating agencies came out. I mentioned that on Friday, and it happened on the Saturday or Sunday. It was Moody's that turned negative on the U.S. credit rating. It drew Washington ire, obviously. Now, the move, it follows this downgrade after months of political brinkmanship around the U.S. debt ceiling, and federal spending and political polarization have been a rising concern for investors, contributing to the sell-off that took the U.S. government bond prices to their lowest level in 16 years. So many tried to disagree. Janet Yellen disagreed with the downgrade, of course, and that was just hilarious. I don't know your thoughts.
I'm actually staring right at a post from Gold Telegraph that said U.S. Treasury Secretary Janet Yellen says she disagrees with Moody's outlook on U.S. debt, and Gold Telegraph just says when it rains, it pours. The jokes are truly writing themselves at this point. Here's just to stay on the debt side of things, okay? This also comes from Gold Telegraph about the American financial system. Delinquent commercial real estate loans at U.S. banks have hit their highest level in a decade. U.S. bank stocks have collapsed to all-time lows when measured against the S&P 500 index. Jamie Dimon and his family will sell $141 million of JP Morgan stock in 2024. Not holding on to stock anymore, right? They not believing in the future of JP Morgan stock. U.S. banks are sitting on an estimated $650 billion of unrealized losses on their bond holdings. And finally, the 60-plus days delinquency rate of the subprime-backed ABS that Fitch tracks rose to 6.1 in September. That represents a record. These are the facts, and sometimes the facts are served cold. The fact is you can avoid reality. You can't avoid the consequences of avoiding reality. The debts are really starting to mount, and they're really starting to matter, and it's coming, and it's already in your backyard.
Yeah, 100%. We can't ignore this. And Moody's and Fitch are two of the three major rating agencies in the U.S. That maintained a top rating for the U.S. Obviously, the third being S&P, the major heavyweight, which has had a AA plus rating since 2011, and they didn't look back. They didn't raise it back to AAA, even in the good times. So we're going to sit back and watch and wait for the S&P, because I got to tell you, they are getting ready, and as a result, we have to be ready for that volatility, because when that downgrade happens, look, this downgrade happened over the weekend. We were enjoying our dinners, we were with family, we were out shopping, hopefully, and just having a good time, and then a downgrade happens. And this is how quickly the markets can turn on a dime, Jeremy. We all have to be ready, and this is why clients and people, citizens are preparing, they're hedging, they're setting up, but they're not just preparing, they're setting up for the amazing opportunity in these markets in precious metals. It's going to be a phenomenal ride up.
And, you know, the opportunity in the precious metals, which we're really going to drill in today, specifically on silver, is absolutely massive. If you thought what you saw in the cryptosphere was big, Wait till you see what happens in the precious metals market, because we are at the end game of the suppression of the physical market in silver. I'll just give a bit of a hint here. We've talked a little bit in the past about the derivative industry of precious metals, specifically in silver. And that includes your ETFs, your gold and silver backed funds, your certificates, anything where you don't actually own it, but you've invested in a custodian who does own it. Does that make sense? We're talking about someone else, some other entity owns the metal, but you invest in that entity. So there's physical metal somewhere, you just don't own it. And what's happened? The metal has stayed in the hands of the industry. It's stayed out of private hands, and it's basically an off-ramp of the worst nightmare for the central bank system, which is that you decide to physically own metal. This is no different, by the way, of what you see with a lot of the Bitcoin proponents. It's all about, well, we want to battle the central banks and the future is Bitcoin, because somehow that will stop the central banks.
Right.
We have a central bank problem.
Yep.
And if everyone is buying the physical metal, specifically silver, you will force those central banks to close, essentially. You will root out the corruption. And the gold and whatnot from those central banks, it's my thesis, would go back to treasuries, right? That's the people's bank. Right? So when you have a Federal Reserve that owns gold and their mandate is cut short and they're no longer allowed to have business in the United States and they're closed down, what happens to their holdings? Do the American people not hold them accountable for the things that they've done?
They must.
Right? I would imagine if it gets folded back into the treasury, so does the physical gold with it. And that's the people's gold.
That's right.
So silver has no counterparty risk, and what I've been starting to see, Jerry, have you started to see the trend of these derivatives where they're taking out the product even as the price is rising?
Yes, we've been noticing that trend. We see that trend.
So just to go a bit deeper than that, what could that possibly mean? That physical metal is being drawn out of these derivatives at a time when you would think that they would be going in. It tells me either one of two things. Either one, we were always and completely right about the fact that people will decide that they want the physical product in their hand more than they want to trust someone else to hold that physical product. That's true.
That is true.
That can be definitely one reason. That's one of the reasons why we started the registered accounts with our custodian Questrade. And that was exactly what we told them in 2015. We said, listen, people will pay more to ensure that they have that physical product in their possession, that it's theirs, that they get their inventory report, that they know it's theirs. And when we say pay more, what we're talking about is that they physically buy the product themselves. Right. Versus these derivatives where you don't actually buy the product.
Buy direct.
The other thing it could be is the entities that are trying to suppress the price of metals are going to those derivatives to get the physical metals. And when the physical market has been drained out of the COMEX and drained out of the LBMA and it's all gone eastward and it's all gone into private hands, then where else are you going to go but the derivative market of your own construction, of where you put the physical metal? And I believe, and it's just my instinct of being in the business for 15 years, that is one major reason why you are seeing redemptions at this point. And I think that trend's going to continue. And I think that is the death knell of the suppression of metals. And by the way, did you listen to Bixweir this week?
I was going to watch it. I missed it.
Okay. Sorry to usurp all the time here, but
no, I love it. Keep going.
But Bix was talking about this as well. He mentioned the fact that they've stopped producing eagles for the year. You don't stop producing if you don't have any silver, right? If you're looking to stop records from being broken and you physically don't have any, you can't produce any. Now, they should be producing it by law. even if they have to go out into the market to get it. So the fact that they're doing that is illegal, but nonetheless, there's nothing being created for Eagles at the U.S. Mint right now. And he's talking about, and I totally agree, that this is all about breaking $30, that after we break 30, it's going to be a quick run to 50. That's nothing in today's market. Remember, if the dollar's worthless, gold is priceless. Same for silver. And once we break 50, you can't even start to fathom where it could go. $100, $200, $300, $600 an ounce. We'll talk about the route to those numbers, how we get to those type of numbers, as well as what's going on at the debt clock. We've kind of mentioned the idea of debt clock so far. I want to stay on the topic of debt and talk about the debt, and as well as what the debt clock is doing, which is a great way to review the reality of the situation. And so much more. If you want to get involved in the market, give us a call. The number 1-877-8-SILVER. The website, guildhallwealth.com. I'll pass it off to Jerry right after this. It's the Real Money Show on 640 Toronto. Welcome back to the Real Money Show on 640 Toronto. Thank you so much for joining us. We've got a lot to talk about. We've talked a little bit about debts. We've talked a little bit about the derivative markets. We know that we're coming to the end game of physical precious metals in terms of their suppression, and that means that the value of holding these things, right now they're undervalued, and if you can get your hands on them, just wait and see what they're going to do to your purchasing power over the next several years. Jerry, I have to also give you another credit. Something you've been talking about for the last, several months is stagflation. And now we're starting to hear terms like stagflation. It's here. We're there. As we're talking, bang, you bring up an article during this exact thing. Why don't you kick it off?
Just last week, a former Bank of Canada official is warning that Canada is now facing stagflation risk. Another post by Gold Telegraph. Check that out. What has historically done well in stagflation? Hint. Canada owns zero. Well, that answer would be gold. Gold, during 1970 to 1980, delivered stellar returns. If you're looking for returns, look to gold. Gold delivered 838% in a decade. Silver, 1,100%. 11 times your wealth. Gold and stagflation, Jeremy.
Yeah, so look, if you want to get involved in the physical market, it's exactly what we handle at Guildhall. You give us a call, 1-877-8-SILVER. The website, guildhallwealth.com. If you want to pick up a small amount, maybe get out one of our combos, which is we've got 50-ounce silver combos, 100-ounce silver combos, 200-ounce silver combos. Great way to get started by starting with a small variety of product, getting it in your hand, seeing what this is all about, and you can go to guildhallpreciousmetals.com, which is our e-store. I want to get into some registered account stuff a little bit later, but what do you got right here, Jerry? CPI?
Yeah, that was
one of the reasons we were starting to move up. Okay, go ahead.
Quick print of it this week. We were looking forward to the inflation data that came out this week. The print came out showing a relief on inflation. Unexpectedly comes in lower than anticipated. Boom. The anticipation was that the Fed could tone it down on the interest rate hikes. We could start seeing a potential rate cut. So we're seeing pricing in on the rate cuts now. However, if we look at the Colbasi letter in response to the CPI print, inflation at 3.2%, inflation is much higher in many basic necessities. Car insurance, 19.2% up. Car repair inflation, 9.6%. Transportation, 9.2%. Rent inflation, 7.2%. Homeowner inflation, 6.8%. Food away from home inflation, you want to go eat out, 5.4% for you. Cereals and bakery products, good old breakfast goods, 4.2%. While headline inflation is down from its highs, many basic necessities are still seeing 5% plus inflation. It's also worth noting that we do not have deflation, we have disinflation. While the rate of inflation is down...
What's disinflation?
While the rate of inflation is down...
I'm sorry to interrupt you. Go ahead. I did it again.
Prices are still rising. But affordability is getting worse. The sentiment, Jeremy, is just down the drain. And this is coming from a recent Gallup poll this week. It revealed a historic low in confidence toward key institution and leaders. Trust in the federal government, trust in big business, trust in media, education systems, scientific, medical establishments, big tech, law enforcement is at an all-time low, highlighting significant crisis in public faith and confidence in these societal pillars. So just a collapse of trust, not just in America, but also in Canada, the lowest figure ever recorded. This is also indicative of, the CPI is giving us a 3.2 reading, but inflation is much, much higher, Jeremy.
There's so much lies going around, and you talked about, and one of the things that we see and we talk about with our clients every day are all the wins. There's so many wins everywhere. I mean, even yesterday, Trudeau wasn't even invited to an Indo-Pacific trade group talking about ways to defend against China. He was in California, and they didn't even invite him.
That's right.
Right? I mean, that tells me there's a lot more going on than just what we're seeing in the news.
Absolutely.
Right? Just like him showing up to places and everyone not liking the fact that he just keeps talking and keeps going to all these places. But, look, I'll give you a quick little story. My son goes to this art class on the weekends. Not the most artistic kid, but he loves it because his cousins are there. So we go, we all go. He has his they have their class. We have some coffees and chit chat. We got an email this week. They're closing this art activity school, whatever it is, on the weekends because the landlord is raising their rent by 30%.
Wow.
30%. So it wasn't bad enough that, for better or worse, the Disney store had to close because of COVID. And you explained to your kid, well, people weren't going out of their homes and spending money, so they had to close. Sorry, kid, your art class is canceled because they couldn't afford the rent. You know what I mean? It's getting really bad. And of course, this has nothing to do with the landlord. Maybe they have their own issues that they're dealing with, and it just flows downstream, right? Mm-hmm. But you also talked, Jerry, you just mentioned about the lies in the media, okay? Speaking of the kids and the cousins and whatnot, one of the cousins were eating Skittles. Okay. My wife and I are like, no, those are getting banned. There's lawsuits against it. It's basically like talcum powder, right? And some people are like, as long as it's on the shelves, it must mean it's safe.
Right.
Okay.
It's passed the test.
So I did a little search online while we were at my in-laws. And I said, isn't this interesting? If I look up Skittles, the first thing that comes up on Google is headlines. They are not being banned. They are not being banned in California. Okay? Then, if you look up, let me just quickly see if I've got it here. Yeah. If you look up Skittles titanium dioxide, you should see what pops up. The dangers of titanium dioxide. Yes, they have it in Skittles. What will it do to you? What will it cause? All of the damage it can do, right? So it's just about the search. If I just look up, so what it's trying to say is the narrative is as long as they're not banned, they're safe.
Right.
Talcum powder. As long as it's on the shelf, it's okay. If they're not pulling it off the shelf, it's good for me to have. Right? And we have this cognitive dissonance in Canada that somehow we think our regulators are superior to everyone else.
If it's on the shelves or if it's on television, it's automatically qualified to be ingested by humanity. No.
And those wins do get through, right? The single-use plastic, okay, it's a win that got through. But is the mainstream media going to talk about military reversing their vaccine policies?
That's
probably not. What about all the cases where people stayed open and were fined and all of these things? They're not telling you about these things. So where do you go to get the news, right? You have to wait for things to break through the mainstream. And, if you're just going to sit there and wait for it to break through, you're going to be waiting a long time.
A very long time. Absolutely. I mean, in response, going back to the CPI print and, trusting the data from the CPI and the Canadian statistics, the silver market didn't buy it. The silver market had a phenomenal week this week, up about 7%. from the lows of 22.30. So congrats who bought in at the lows. Silver is trending around the 7-week high. So the momentum now in the silver market is there. The silver to gold ratio did narrow quite a bit. And all eyes are on the silver market. The Silver Institute had a meeting this week. We had our good friend John Forrest Little attend. So we're waiting to hear back. But a lot going on in as far as the silver market goes and the debt and the debt clock.
Okay, so silver is pretty low. We see that the all-in cost from First Majestic, they were talking about just under $20 an ounce US. So you're talking really low numbers in terms of being able to acquire silver, $5-6 above that. And now the debt clock is really, the debt clock themselves are doing memes now. It's like it wasn't enough to just show the numbers. They're trying to emphasize what some of these numbers are meaning. So when we look at the debt, Jerry, and you look at the price of silver right now, how good a deal is it?
You cannot compare. The dollar to silver ratio just printed, it's about 1,500 per ounce. And gold will be about 13,000 per ounce. The paper to silver ratio right now is 205 to 1.
That means that for every ounce there's 200 ounces plus on paper.
On derivatives, yes, in the derivatives market, way too extreme. And the paper to gold ratio now is at 130 to 1. So you got to pay attention to this. This is definitely why you just allow this website to just sit in front of this website for a little bit.
Soak it in.
Just soak it in and just getting put into the trance with the amount of the U.S. debt is going on and where the opportunity is. Your eyes will gravitate to the bottom right where you see the silver and gold prices.
I mean, I think that when you're looking at that, what you have there doesn't show you, it's blocked off by the meme, but I think the total tax income in the U.S. is something like $3 trillion, and $1 trillion of it is paying the debt. The interest on the debt. I think maybe they get 3-4 trillion in a year of revenue, and 1 trillion of it is paying the debt. This is the problem with debt to GDP, and there's so many countries that are over 100%. And once you've hit over 100%, there's no going back. You've got a country like Japan, who's over 200% debt to GDP, yet gold is doing crazy well. You know, it's up 24% this year alone. It's had a great run over the past couple years in Japanese yen. And even and also the people themselves in Japan are buying physical gold. Japan has an estimate 5,300 tons of accumulated physical gold, which is roughly 10% of the global gold reserves. People in Japan have been stockpiling to hedge against economic instability for a long time now. It is the heartbeat of where monetary madness lives, which is Japan. We have to keep our eye on that. And gold is ultimately a hedge against stupidity. Yeah. Stupidity of these central bankers. Yeah. The fact that they think that they can just keep printing to oblivion. And it's already coming down on us, and we have to figure out how to get out of that. And that's why we think silver is so important going forward.
Absolutely. Everyone needs to check out the usdebtclock.org. Do that this weekend and find out and question, like my friend Aaron from Silver Gold U. He writes, what the heck is going on with the U.S. Debt Clock website? A pic of an American Eagle silver coin with contents under pressure on it. And then you can see this meme. What it is, it says, it's a silver eagle confined by the U.S. military and the U.S. government, confined by the U.S. Federal Silver Price Containment Division. But the quotes above the military says, from the soldier says, it's not going to be enough. And the politician on the left-hand side says, we've done all we can do. The silver price containment is ending, and the suppression of silver is being released, and we're going to see amazing launch in silver prices.
I believe that's what Napoleon said. There's nothing else we can do, or something like that. He had a famous quote like that. That's where we're at. I mean, government, military. Let's talk about that in the next segment, because I think that's really the linchpin when it comes to the silver price. And whoa, do you want to be involved when this thing starts to take off? And we are getting closer and closer to that moment. Meanwhile, we've had an incredible run in silver. It's just behind gold in terms of its gains over the last 20 years and 15 years. So let's talk about where it's going to go and why you want to have some of that in your holdings. The number 18778 silver, the website guildhallwealth.com. The good stuff's to come, the price is to come, the type of money you're going to make is to come here on the Real Money Show on 640 Toronto. Welcome back to the Real Money Show. The number 18778 silver, the website guildhallwealth.com. If you're looking to own physical gold and physical silver in a registered account like an RSP, TFSA, Lira, LIF, RIF, or even an RESP, we can help you with that. We've been doing this since 2016. What we help clients to do is to own their actual own physical precious metals in their RSP stored outside the banking system. Now, it has to stay stored. You can't self-store product that's in an RSP, but what we do is ensure that it's your product, it's fully allocated. You can go to the vault and personally audit your holdings. And again, it's an actual asset in your RSP held outside the banking system. It's fantastic. I've been doing it the whole time. Clients who, got in early are doing incredibly well. Obviously, anyone who's been purchasing over the last year, 2 years, has been in a position to just keep building to their positions before we stair-step higher to that next level. And that next level, Jerry, is $30. How do we break the $30? Where do you want to go with this? You want to talk about the military? Or you want to talk about the technicals?
Just some quick technicals. About that $30, you just hit the nail on the head. So Grady from Grady.com, that's GRADDHY.com, he writes, always knew the very big picture. The big breakout level for silver using the yearly time frame is $31 to $32 and not the $38 and $50 silver that is on the lower time frame. And he shows this chart. The blue tightening arrow pattern means a breakout is coming. A 43-year is a very bullish pattern. Let that sink in. So watch that $30 mark. As you mentioned, that breaks, we're headed much, much higher. Very quick.
Okay, so we have two things here. Let's kind of bring them together. On the one hand, you have a 43-year trend that is looking to basically have a breakout at this point towards the $30. That's what Grady's talking about. Is it Grady or O'Grady?
Yeah, Grady.
Okay, Grady. And then you have what the debt clock is pointing out, which is essentially a price suppression scheme that is at its absolute peak, ready to burst. So you have a 43-year trend and a scheme that's about to burst. So tell us how the military plays into all of this. And let me just tee that up by saying, in the past, we've talked about 500 ounces of silver or a monster box of silver being in every Tomahawk missile. So I'm sure the military-industrial complex loves having as much physical silver on hand as possible.
Well, that's exactly right, Jeremy. This is just going right back to sentiment and the trust, what we just talked about in the previous section, the Gallup poll, about our confidence towards key institutions that we rely on. One of them being the U.S. Department of Defense, maybe the U.S. Geological Survey, maybe even the Silver Institute, where we get all of our silver usages demand over the past, how many years have we been talking about silver demand, Jeremy? Solar, electronic. But so anyways.
Not only that, they're saying they want to triple down on all the green stuff.
That too.
The electric cars and solar power and wind power. So where are you going to get all that physical silver from that you put in all the batteries and put in all the solar panels?
That's exactly right. So just this week, the Silver Institute hosted its annual Silver Industry Dinner. Our good friend John Forrest Little, whom we had a few videos in the past with, was invited. You guys have to check him out, follow his work. He did some great work recently that just blew my mind over the last, nothing has piqued my interest more over the last 10 years, Jeremy, than this very data piece that I'm about to elaborate on. We shared a little bit about this a couple weeks ago. The title of the show was, If You Want World Peace, but just buy silver. And that's where we're going with. We're going to go down this rabbit hole right now, because the question I posed this week in referencing John Forrest Little's article, which was posted on SilverSeek this past week, was just this. A couple questions. Why does the U.S. Geological Survey omit military usages for silver? And why did the U.S. Department of Defense stop the reporting of silver usages in silver? Silver usage and silver from the military are rockets, missiles, bombs, shells, fighter jets, satellites, tanks, subs, torpedoes, night vision goggles, communications devices, radars, and the big one, Jeremy, nuclear. The military's silver usage is more than 15 times greater than the U.S. Geological Survey's categories of investment bars, electronics, coins and metals, solar, jewelry, silverware, brazing and solder. I mean, who cares? Who cares? What is the military doing now? The U.S., so obviously the Silver Institute, which gives us the data, released their press release just after their dinner a couple nights ago. And they wrote, in their projection, they see that silver industrial demand is expected to grow 8%. That the Silver Institute is reporting that silver demand drivers are effectively to double the rate of growth over the next decade, citing these key drivers. You got photovoltaics, you got the solar, the power grid, and 5G networks, growth in consumer electronics, and rising vehicle output. Nothing on military. So I had to ask John, I'm like, was there any mention at the Silver Institute dinner about these military attributes? How could we ignore the elephant in the room here? We have war blazing in Ukraine and Russia. We have war blazing in the Gaza. What's going on? I haven't heard back yet. We're waiting to hear back from John. But this is where we want to go, because what we do know is the Department of Defense in 2003, their budget estimates shows that there's a silver shortage at the Defense Logistics Agency and their precious metals recovery program. Historically, the program procured silver at $3.97 per troy ounce. That surplus was exhausted due to silver scarcity. The program is now procuring silver at market rate of $30 per troy ounce. Can you just allow that to settle in and understand that these people are short? The supply is short in the military, and the more we put a demand on this, on taking the physical, not what Einhorn is doing. Einhorn's buying $32 million in the ETF. Great, you're highlighting, but you're diverting people away from the physical. We're telling you to buy the physical, because every ounce that comes out of these coffers of the COMEX and the LBMA, we're putting the restraint on the military-industrial complex. And yes, if you do want world peace, you go after those silver bars. And that hashtag, we got to mention the hashtag is Silver Squeeze for Peace. That is our hashtag. We want you to run with that because we really mean it. Jeremy, your thoughts?
Yeah, Silver Squeeze for Peace. My thoughts? Well, look, the Pentagon failed its audit for the 6th straight year. So what are they hiding? Well, it's hard to trust a military system that can't get its books right, right? So think about that as we go to break. The number 18778-SILVER, the website guildhallwealth.com. We promised we'd talk about where the prices are headed and what that means in terms of growth potential in your portfolio. We'll talk about that on the other side of the break. This is The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 18778-SILVER, the website guildhallwealth.com. We are really excited about where the prices are at, and I know some people may have been holding on to the metals over the last couple years waiting for some bigger moves. We truly believe those bigger moves are ahead of us, as we're seeing CPI come down as excuses for, the inflation fight is working. We're seeing the economy fall apart. We're seeing the debts really start to matter. This is how you protect yourself against the catastrophic things we're seeing with this economy moving forward, whether it's disinflation or stagflation. You've got to protect your wealth in certain ways. And one of the ways that you do that, as Greenspan once said, is to have something that can't be destroyed by inflation, which is a physical hard asset like gold. And what we're talking about right now is silver. Now, Jerry, you had a client this week who purchased some 6,000 ounces of silver and paid a little over $150,000 US for that product. And I just thought we'd throw some numbers out there because, again, we really believe that this market's $30 is nothing. $30 in my mind is the starting point of the regatta, right? It doesn't, you might be behind, you might be in front. You got to pass that starting point, and that starting point for us is really going to be $30 an ounce. So anything you can buy before $30, you're in the race. You're going to be in the race. at $30 an ounce, 150,000, it'll be worth 180 US. So a little bit, kind of make things looking good, a little bit of gas for moving into the race. But once we get to $50, we're looking at having doubled the money. And so that would be about 300. Now, we believe that it can go to easily into the 100 range. We can show ratios that would show very, very conservative $170 an ounce in silver, and that would net the client $1 million, a little over $1 million.
US.
For an outlay of 150. So that's pretty good. Now, if we went by what you were talking about earlier in the show about what silver did during stagflation in the 70s, you'd be looking at a return, a net of what it being worth of over $1.7 million. Now, I can tell you at that point, what you would be able to buy for a house in Toronto, your average house in Toronto will not be selling for $1.5 million. Mm-hmm. Right? Given where we're at today. We're already seeing signs of distress left, right, and center.
Yeah.
So I think that the numbers look good.
Huge opportunity. I love it. This setup is going to be one for the record books. If we look at the markets soberly, and if we look at the markets rationally, you can see the value of where silver is. Silver is beyond strategic at this point. It's beyond precious at this point. The silver market is going to be that market that is going to change the game for you, your family, and your future generations. And, give us a call. The silver prices are phenomenal, especially here at Guildhall. We will not be beat on price. We do ship on orders over $1,000. You can get your hands, just get your feet wet with some combos. A 50-ounce combo, 100-ounce combo. Get your feet wet. Great Christmas presents coming up. So give the thought of silver a chance, and you won't be saddened by any market in this market.
Yeah, okay. Look, we're talking about 6,000 ounces there, but if you put in under 20,000, like $15,000 as an example, at the 11 times that we're talking about, it would be worth $170,000. So $15,000 could end up being worth 170. I mean, this is the type of inflation rebate that everyone deserves.
Exactly. And talk about that rebate regarding the RSP, Jeremy. I like that.
So this is something that
opportunity.
When I've been talking to clients, they've been really excited by it, and they're saying, "How come no one's ever told me about this?" Which is that every year, most people, they're looking for what they want to hear from their accountant is, you don't owe anything. That's the goal. You don't owe the government any money, right? Now, I've paid in the past. I've owed money. And my learning lesson was always, well, put money in the RSP and make sure you don't owe them anything, because it's my money and I shouldn't give them anything, right? What do they do with it? What have they solved for you? What have they fixed for you? Right?
Nothing.
I even had a conversation with my brother-in-law. He didn't disagree. He's in the medical field. I said, "What? How does Olivia Chow come out and say it's that time again? The beds are, it's the system's stressed again. The hospitals are stressed. There's not enough beds. Really? You guys have had 4 years to fix this."
Right.
4 years to fix this problem, right? Don't tell me you can't fix it. You don't want to fix it. It doesn't play into your schemes of whatever schemes you're doing. And trust me, the corruption's going to come out over and over and over again. I digress. The point is that you don't want to give them the money, but once you get to even, once your accountant says you don't owe anything, do you know what that means? It means that anything you put in at that point into your RSP, you are going to get back as a rebate. You're going to get it back.
Yeah.
So if you get to zero, I don't care if you have to beg, borrow, and steal. If you can put $15,000 in, the government will send you a check for $15,000. That is the most free money that you're going to stake yourself to get.
I love it.
It's it boggles my mind that we don't think about that more often. Now, what would happen if you put that into metals over the next 20 years? You're not only going to keep up with inflation, you're going to beat inflation.
You're going to beat the 30% withholding tax.
And you're going to improve your purchasing power of the year. You're going to stake yourself that money. And in 15, 20, 30 years, you're going to walk away with so much money, you won't worry about paying the income tax on it. Believe me, that's not your problem. You gotta stake yourself, make the money, and gold and silver will do that. Gold's up over 450% over the last 20 years. And believe me, that is not the amount of money that's been created over the last several years. That's going to make this market, that's going to make that 400% look like nothing compared to what we see. So we're super excited. Give us a call. The number is 1-877-8-SILVER. Learn about how to put physical precious metals in an RSP. Pick up some silver. Get it into your hands if you want to get in before $30. And as Jerry said, we've got great prices when it comes to silver. You're not going to find better prices than we have at Guildhall for silver. You can go to the e-store, guildhallpreciousmetals.com, the website, guildhallwealth.com. And
the
Jerry...
number.
Well, the number, obviously, 1-877-8-SILVER. The hashtag...
Silver Squeeze for Peace.
Thank you, everyone, for listening. Thank you for joining, Jerry. It's The Real Money Show on 640 Toronto.